Sometime last week, I put out on my Instagram, the Master Your Trading Mindset Instagram, what are the biggest challenges, what are the biggest problems you have with your trading psychology? And I got a few responses. One of the most common responses though was that I make profit, I have a few good days, I have a few good weeks, I have a few good months, and then I give it all back. So I wanted to put a video together because this is a very, very common and highly requested challenge that people or traders are having with their mindset. So I wanted to put together a little video for this. It's gonna be incredibly informative, so stick around to the end. And if you do find it useful, make sure you do share it with your friends, other traders you know, because this is really a principle that I synthesized and I came up with after summarizing Mark Douglas's work, after summarizing some of the best in the psychology and the human behavior. And I think you can get a lot of value from this. So stick around and let me know what you think in the comments below. Okay, so I brought up the iPad here and I'm gonna explain the mindset of a trader from a psychological perspective. And in particular, we're gonna focus on a trader who's just won in the market. I'm gonna show you why they're giving a lot of their profits back and what you can do to mitigate that. Now, this comes back to one of the principles Mark Douglas talks about with the boom and bust cycle. So we're gonna draw on that. And what I'm gonna do here is I'm gonna draw literally the mindset of a trader. And we're gonna do a little bit of a graph here with the emotions of the trader plotted over a specific period of time. So the x-axis is time and the y-axis are the emotions. The top here being the positive emotion, we can call that elation. An emotion to an extreme, a positive emotion to an extreme, we'll call elation in this particular scenario. And to the other extreme, to the negative, we'll call depression. Now, your emotions in a sense work in terms of ratios of perception. If we perceive a lot more positive compared to what we perceive negative in that moment, we're gonna be extremely elated. If we perceive a little bit less positive in that scenario, we're gonna have a lowering degree of a positive emotion. Maybe we're gonna be happy. If we see a one-to-one of the particular, we're gonna be balanced, we're gonna be poised. So this center point here is one-to-one. We can label that being poised and balanced in a state of equilibrium, which you've probably heard me speak about in my YouTube before. And down here, we've got, let's label that depression. I'm not exactly sure if that's how you spell depression. And up here, let's label it elation. And let's just whack some ratios on here. An elation would be around a 7-to-1 ratio, whereas a depression would be the other way around, a 1-to-7, or the other way around, 1-to-7, 7-to-1. And what this means is I'm seeing 7 times more positive than I am negative, I'm elated. That's my awareness in that particular moment. And with the depression side, I'm seeing 7 times more negative than I am positive in my awareness, that's the depression. So your emotions are in large part are actually determined by your state of awareness and your ability to see both sides in that particular scenario. Now, let's get back to the point of the video. If we're talking about a trader giving it back after they've won, what this actually tells me is that they're going on a boom and bust cycle, which we can just draw very simply as this type of graph. Now, if you paid any form of attention in high school math, you would know that this is some sort of a sine graph, I believe. I'm not exactly sure, let's just call it a sine graph. And what this is it's plotting the emotional volatilities of the trader. The swing of the left, and that's being counterbalanced by the swing of the right. And in other words, we're gonna elaborate on this more, but the trader, and this isn't to scale 100%, this bottom part should go down a little bit lower. But what's actually happening here is the trader is, in a sense, when they're winning, getting extremely elated, and that's actually creating the resentment to the loss or the losing, right? Now, you hear me talk a lot about pairs of opposites as a trader, and from a psychological perspective, that the pairs are entangled in your mind, and the more elated you get when you win, the more depressed you're gonna be when you lose, because they're pairs of opposites. And the resentment of losing is actually created by the infatuation or fantasy of winning. Because the more pleasure you associate to winning, you got that way up on a pedestal and you're so addicted to that feeling of winning, then when you get its opposite, which is losing, or you don't win, which is losing, you're going to be experiencing all the opposite of that, all the pain of that, the withdrawal from that, the withdrawal from the dopamine, that grief, that resentment, that pain. So my theory on why traders go through the boom and bust cycle and give it back is in large part because they're getting elated when they win. The boom and bust cycle is kickstarts by the elation over winning. And what that means is that the trader gets extremely elated when they win, and they're aware of all the positives in that moment, and they're in their mind so skewed to this event is so positive. It's 7 times more positive than negative. I can't even see any drawbacks. I can see very few drawbacks to this win. I'm so elated by it. That is, in my opinion, the kickstart of the boom and bust cycle. Why? Because when the trader's extremely proud over their win and they're elated, guess what they start doing? Or in other words, guess what they stop doing? They stop doing the high priority actions that got them there in the first place. And they start taking low quality trades in their trading plan. And they start to become complacent. And they start to think they know it, and they start talking down on the market and projecting low quality setups onto the market because they're in this state of pride, they're in this state of invincibility. And guess what? Nature has shown this over thousands, millennia, over thousands of years, that pride gets humbled. Because what happens in this state of pride and this elation over winning is you then start talking down to the market and you start using language like the market's going to do this and it's going to happen in this time frame. It's going to go to this price. I'm going to make this money. And we become blindsided in our own ignorance, and we become blinded in our own pride, and we start doing all these things. Low quality setups, low priority actions, and all of a sudden what happens is we start to take losses. The market humbles us because the market's never wrong. So what happens is when we give it back, this is the process of giving it all back. And then what happens, because we're so addicted to that fantasy, that mania, that dopamine rush of winning, and losing, it's depressing. And we just can't believe our actions. We beat ourselves up, we've given it all back, we did it again, and we get kickstarted into a cycle. Now, if we were to draw this graph out, you have to understand this cycle never ends if you don't have the mindset tools to be able to deal with that. But the truth is, you can stop the cycle if you know what starts the cycle, in a sense. The thing that starts the cycle of the boom and bust cycle and giving it all back is the addiction to winning. It's the pride over winning, and it's the pride getting to your head and then letting that cause you to take lower priority setups and stopping to do what it is that got you there in the first place. So the way you go in and counterbalance that is the moment you get proud, because remember, elation or pride is in your mind a perception that you're seeing more positive than negative in that moment, the ratio. You can bring that ratio close to being poised, balanced, in a state of equilibrium by asking yourself good questions. So the way you ground that is by asking good questions. One of the best questions you can ask as a trader when you take wins to humble yourself and get yourself back to that state of equilibrium is, what are the drawbacks of that? What are the risks? Right? What did I miss? What did I do wrong in this particular situation? To ground yourself and to get present and to realize that at the end of the day, you're just a human being. You're going to have both sides. And these questions, these grounding questions, allow you to get back to a state of equilibrium yourself in that moment, and you govern yourself so you're not needed to be governed by the market, or you're not needing to be humbled by the market. You do it yourself back to a 1-to-1 ratio, back to that state of equilibrium, so you don't go on these wild swings. And then guess what? When you lose, you do the same thing. You ask yourself a good question. What were the benefits of that? How did that serve me? What did I gain from this experience? How can I use this to my advantage? How did this help me become a better trader? And you're asking these good questions to get yourself back to that poised state, that balanced state, that state of equilibrium, so the market doesn't do it for you. And this is the difference, in my opinion, what separates really great traders from mediocre traders. Really great traders have great questions to keep themselves poised and balanced, because guess what? When you're poised and balanced, you stick to your trading plan and you stick to your processes. But when you're elated, thinking you know better than the market, you go away from your trading plan, you project low quality setups. When you're depressed, thinking the market's way better than you, you're too fearful to act in the market. So these questions are necessary to bring yourself back to that state of equilibrium so you can stick to your processes and your trading plan. And that's really the key message here. Well, the key message here is that the reason you're giving it back is because of the pride and the elation of winning. And that leads you to taking low quality setups, doing low priority actions, and talking down to the market in a state of pride, which ultimately gets humbled. The way you overcome that is by, instead of letting the market humble you, instead of letting your win get to your head, ground yourself in that moment with great questions. What are the drawbacks? What are the risks? What are the disadvantages? Have a look in that moment. You'll see them there. You'll see that it stunts your opportunity to grow. You'll see when you win, you're less teachable and less open and less willing to learn. And when you win, there's a very low probability of you going in there and refining and learning and extracting lessons from that. And when you win, maybe you're a little bit proud of it around your family and your friends, and that causes a distaste. Or maybe when you win, you're less likely to go off and ask great questions, get more coaching, get more teaching to continue to grow as a trader. There are drawbacks there. You want to make yourself aware of them in that moment so that you can humble yourself, ground yourself back to that state of equilibrium so you get back to your trading plan on the next trade. Now, hopefully this was insightful, gave you an insight into how you can transcend the boom bust cycle and why you're potentially giving the money back that you've made. If you found this valuable, please share it with your friends. I know traders out there will get a lot of value from this, so please share it around if you found it valuable. And I'll see you all in the next video.